Good evening, everyone. David Paul speaking. I'm looking at AppDynamics. It's a share that I've had a position in for a while. On VectorVest, it's trading above its valuation. It was well up on Friday, and our relative value number is an outstanding 1.43. Now, this means that we believe the share will outperform a corporate bond over a window of 3 years into the future. Our safety of earnings is also an excellent number at 1.44, and the short-term trend at 1.32 on a scale between 0 and 2, also excellent number. And as a result, the master indicator VST comes in at 1.4. A really great set of numbers. It's on a buy recommendation. We believe it's going to grow earnings at 27% next year. So let's have a look at the chart. The fundamental numbers look good, and that's the chart, folks. That's a weekly chart over 3 years, and that's a candlestick format. And down below the chart I've got earnings per share growth, and as you can see, this company has more than doubled earnings per share over the last 3 years, and that's the engine that's driven the share price up the page. It's pulled back, and it pulled back in what many technicians would refer to as an irregular correction, and recently made a lovely little double bottom on the weekly chart. Of note, folks, is that this bottom, just about here, it was significantly higher than that last old top. So that gap is what Charles Dow called way back in 1880 a fast trend. That looks very good indeed. So fundamentals are good. Safety of earnings is very good. And look what we have down below. We've got the price rising, but the weekly MACD, a very powerful indicator, falling, and this is what technicians refer to as reverse divergence or a slingshot. Now that reverse divergence, folks, is built up over the last 6 months. That's a very strong signal. Looks to me, if the general market can keep going, that AppDynamics is going to break up strongly over the next few weeks. I'm certainly a very committed holder. Thank you.